Okay, let's get you updated here on a Wednesday on what the grain markets are doing. Last time we checked on that corn board, we had a little weakness creeping in there. Let's see if it can rebound yet or if it's continuing to sag. Let's go to the big board. And well, on the March corn at the present time, these are live quotes from bar chart here. Yeah, we're down 5.5 cents at 4.85, almost on the low of the day, just 2 ticks from it. Wow, we're off of our overnight high by about 9 cents right now. Meanwhile, in the soybeans, remember, we sold some soybeans to China overnight, according to USDA. They bought 136,000 tons, and we're down anyway. You have January soybeans dropping 7 3/4. We're at 12.97 3/4. You heard right. We have a 12 handle on them again. And the March beans are down 8.5. We're trading at 13.18, just 2 ticks from our low of the day there. We sold a big bunch of wheat again to China overnight. It was soft red wheat, 372,000 tons to China. Third day in a row of big buys like that. And, well, we have Chicago March wheat up 6 at 637 1/4. The concerning thing about that is we did get up to 649.5, and now we're 12 cents off of that. So that's not necessarily a real strong technical point. If you look at hard red wheat in Kansas City, we actually turned lower now. March is down a penny at 661 3/4. Goodness, that's about 15 cents off of its overnight high there, and early morning high, I should say. In Minneapolis wheat, we have the March contract a penny and 3/4 lower at 737 1/4. In the cotton trade, we currently have the March contract 13 points higher. Starting to see some slippage here. We were way over 80 cents there last night and early this morning, and every time we check, we're a little bit lower. Now we're at 79.80, only 12 points higher. So now we don't have an 80 handle on it anymore. Meanwhile, the new ethanol numbers came out a little bit ago, and just to update you, the production last week really ramped up. We had production in the U.S. at 1.076 million barrels per day. That was an increase of 65,000 barrels a day from the week before. The 4-week average bumps up by 9,000 barrels a day to 1.04 million. Ethanol stocks didn't really change much at all. It stayed at roughly 21.4 million barrels and no imports last week. And here to talk more about this energy complex, I want to welcome aboard Riley Schwieger of CHS. He's in Inver Grove Heights, Minnesota. Hey, Riley, good to have you with us here this morning. So the ethanol numbers came out. They look pretty good. But overall, what did the energy complex look like with the latest data release here?
Yeah, so with the EIA stats today, obviously the market's having a pretty tough day. Pretty deep in the red. We've got crude off over $2, gas and diesel off over 7 cents at the moment. With this weakness in crude today, we are actually looking at a $60 handle here in the prompt contract. So supporting that move, we did see crude stocks off 4.6 million barrels per day. You'd think that maybe be a little bit bullish, but I would say more importantly, we saw Cushing stocks, the delivery point for WTI, up 1.8 million barrels per day, 1.8 million barrels total, bringing that to 29.5 million barrels. Obviously, that storage facility, one of the major ones in the U.S., has been operational minimums, which has been a topic of discussion lately, but now getting some relief, likely from just a really big jump of over 2 million barrels per day in crude imports last week. Imports alone rose 28% or 1.6 million barrels per day. Looking at the demand side, we did see gasoline demand up 3.2%. Not a huge jump there, probably helping some of those ethanol stocks increase. And then diesel, we saw a pretty good recovery of 25% in diesel demand week over week. Pretty much just erasing a significant drop in the previous week. So probably not much of a reaction there. But right now, throughout the country, we're seeing a lot of these refiners coming out of maintenance, buying crude, refining it, and pumping out products. And that's likely why we saw a 5.4 million barrel build in gas and a 1.2 million barrel build in diesel. So certainly supporting this bearish trend that's been established really since September.
Well, now that we have the oil under $70, I mean, is it likely the government will start drawing out of the market and put it in the SPR?
Yeah, they've made some comments this week that they intend to buy as much as they possibly can while prices are at these levels. However, I think they're running into some issues with cavern maintenance, some crude qualities, and just how fast they can actually bring it in. So I think they'll continue to be players in the market, but I don't think they're in a position to buy at a quantity that's really going to shift the trend overall for energies, at least short term.
Doesn't look like they're propping it up at the moment anyway. Wow, January crude down 284. That's on West Texas crude. We're at 69.48 per barrel right now. Goodness, that's over $3 off of our earlier high this morning. Well, thank you, Riley, for talking with us, and we look forward to next time. Riley Schwieger, and he is with CHS. He's in Inver Grove Heights, Minnesota. We'll pause right here. We'll come back, and I'll get you updated on our livestock trade. We'll see if there's any slippage over there when we come back.